Hello everyone and welcome to Day Trader S&P 500. Today is Thursday, December 8th, 2022. It's not even 4 a.m. Eastern. We've already got a report out to our monthly subscribers this morning. Thought we'd get our YouTube subscribers up to date with what's going on. A lot to catch up on, a lot of different possibilities. So let's get right into it. Here we have the Qs. Remember the Qs and NASDAQ, they topped in November of last year. This bear market is already over a year old and it's barely begun. But anyway, we have an A wave down here in June, a B wave up, perfect retracement as far as time and price is concerned. One of C down, two up, was right near the perfect 50% retracement within less than 2 points. And let's see if I have that marked. Where does there's one down and two up, 3 equals 1 at 214. And on the bigger picture, we have A down in red, B up in red. And where is C at? C equals 1 on a log scale. I'm sorry, C equals A on a log scale at 220 and on the arithmetic scale 195. The NASDAQ is lagging. It leads on the way up and leads on the way down. If this was a bull market from this low, then this would have gone higher. You can see the Qs have retraced a near perfect 50%. And if we get over on the S&P on this too, let me just make the point here. Let's do a retracement. This move up is more than 50%. It's more than 618. It's almost a 786. So as you can see, the Qs are lagging, which means it's a bear market. It's still going on. We're looking at wave 3 of C down in all the indexes. I want to show you guys, this is a weekly chart of the S&P, how this has moved in perfect Fibonacci time as far as dates are concerned. And this is number of weeks with the down weeks in red, are the down waves in red, as you can see here, 1, 3, and 5, and the up weeks in black, or waves 2 and 4, the larger wave B and 2 here. You can see the Fibonacci perfection and symmetry, how this is moving. This didn't do perfection here on wave 2 up. If it went higher, the turn date was 12/4 on a Sunday, and it turned on 12/1, one trading day early. One more trading day would have been a perfect 8, but we'll take 7. We had a 7 back here on 1. So anyway, a little review here on the bigger scale. The weekly chart there is moving in Fibonacci and Elliott Wave perfection in terms of pattern, price, and time, all three. It's a good thing. Okay, let's go. That was the weekly of the S&P. Here is the daily. I got to squeeze that in a little bit. The January 4th all-time high. You can see 5 waves down for wave A, intermediate degree in parentheses. Wave B up. Another direct hit, perfect actual date and time. That was beautiful. Then we have 1 of C down, 2 of C up again. That topped on December 1. You can see right there that trend line drawn from the all-time high catches the wave 2 high of A. It catches the wave B high, and now it catches the wave 2 of a lesser degree, 2 of C up, okay, that high. And again, it poked its head just above there, and then the next day it gapped down and said, I don't belong here, and here we go. This is just the beginning of this. You can see that the wave C targets here, A down, B up, C down. Arithmetic is 3143 and log is 3264. So got a ways to go yet, but this is just beginning. Okay, let's look at, do we need this? Yeah, well, it gives a little more detail. We're looking for in wave B, we're looking for 5 waves up, which we got for A, 3 waves down, A, B, C for B on 11.3, and then 5 waves up for C. Again, that topped on 12.1. We had a lot of different targets up there. It could not go above 43.25. That's where it can no longer be a 2. Okay, and you can see those targets there where C equals A and the 786 retrace, which was higher up actually. Move that up there. There we go. Okay, and the 40 the 4100 excuse me, and the S&P was the actual wave 2 high on 12/1. And here we go to the downside. Don't know that we need that. Let's get into the ES. Okay, again, the bigger picture daily chart of the ES, the all-time high on 1/4. There's wave A down in black, B up. Oh, I wanted to point out these retracements here in red. This wave 2 was a 749 retrace. This wave B was a 588 retrace. And this wave 2 of C was a 736. Kind of bookends here. 736 here, 749 there. Squeeze around a 588 for wave B. Again, this trend line from the all-time high, touching the top of wave 2, touching the top of wave B, touching the top of this 2 of C. Again, you can see how it poked its head above there on December 1. That is, the turn date was Sunday 12/4. It topped one trading day before that. Okay, so there we go there. And let me see, I've got one down and two up. I should have wave 3 target here. Yeah, 3 equals 1 at 32.85, it looks like. Okay, so that'll be the next target. Long way to go. This should be wave 3 of C, which is a third of third wave. They are the strongest, most powerful. We should see gaps. We should see volume. We should see a lot of downside pressure. Okay, everything's against this 4110 high. A move above 4110 negates 3 of C wave count. Okay, that's the daily chart of the ES. Let's look at the, I got that 3 target and those retraces. Yeah, let's get a little closer here. We're looking at, let's go straight to the 10-minute because I got more on there, okay? 10-minute, there is that wave 2 high at 4110 on December 1st. Got a couple different wave counts in here, and they really tried to play some tricks. Well, the first trick they played was running it up to 4110. Okay, that was what, between the almost a 786, but between the 618 and the 786. If they're going to take it down, they're going to shake out the shorts first. Again, think to yourself, what could they do to make most of the people lose most of their money most of the time? Well, by running it up like that in a second wave, and remember, what is the goal of a second wave? Wave 2 up here. The goal of the second wave, I might as well back up, is to convince the bulls that the bull market is back. They did that right here. I would say it worked. You could see all the commentary on TV. So if they're going to take it down in a third of third wave, they accomplished 2 things by bringing it up this far. 1, they convince the bulls that the bull market's back. 2, they shake out the shorts. So how are most of the people going to lose most of the money most of the time? Let's take it up here and get the bulls in at the top, and then have the bears cover up here, and then whoosh, take it down. So that's what's in play. I want to look at that 10-minute again. Here we go. I got a couple different wave counts, one in black, one in red. They're both valid. Probably find another wave count in here. There's a few things going on. But in the black, we can see we've got a 1 down, a 2 up, a 3 down here, and a 4. And this 4, I got a note, expanding triangle question mark. This is a little complicated because 5 fell short of targets, okay? You can see the 39.14 here, which was just registered yesterday. I had targets here. It didn't quite reach, which means one of 2 things. 5 fell short, or 4 is doing something else, or the red wave count is in play. Okay, let's explore this. 4 is doing something else. At this point, with that lower low, the only something else could be an expanding triangle. Okay, so because we had a little higher high and a little lower low, so that would be an A up there, a B down there, a C up there, and a D there, or maybe there we go. Not a lower low there, but you can see that that 4 could develop like that still, okay, an A, B, C, D, E, or it just fell short, 5 just fell short of target here, which brings the red wave count in, if you will. Let me remove that, and we can focus on the red. Okay, we've got a leading diagonal here. Again, tricks, shake people out. Okay, bring it all the way down here, and then shake out the shorts here. it's it's almost laughable. I hate to laugh because I don't want people to lose money, but the way they play the tricks after you've seen it, I don't know how many times in the 80s, the 90s, 2000 to 2002, and 2007 to 2009. It's almost laughable. Okay, I apologize for laughing, but here's that 786 retrace, one up, one down, two up. Three was a near perfect 1618. There's four, and there's five right there. Okay, and now we've got an A up, a B down, and a C up. C equals A at 3960. Here's our other targets. I have a pic of that, or I can show that on the newsletter. And here's our 5 targets in black still. Again, at least 2 different wave counts in play here. I guess if you looked hard enough, you might even find a third. But here's our targets here. Let me get a pic of that, or the report we put out earlier this morning, if you can believe that. Let me see here, make sure I got the right one. December 8th pre-market open. I believe that was at 2 something a.m. Let me see here. Here is a correction. Yeah, it's at 2:44 a.m. Eastern. Okay, so here is that chart. Okay, I don't have that possible triangle, but you can see the red wave, if you will. The targets here. Again, first thing we ask, where are we wrong? Well, this 2 up cannot retrace more than 100%, and so it cannot go above 4110. That's where it's wrong. There's the 786, the 618, the 500, and the 382. We're nowhere near it. There's where C equals A. It's a bear market. I keep reiterating to our monthly subscribers every day. I put it in there. I think you'll see it here. Since I alluded to it, that too should have a circle around it, by the way. Just saw that. Here's where, excuse me, this wave 2 topped within 1 trading day of our December 4th turn date. And there's our counts there. Where is that reminder? And repeating every day. This is a third of third wave, and surprises will be to the downside. Okay, any move below 39.14 negates that count. Okay, so that's what we have here. We're going to look at this chart again. There's that 39.14 low. You may see shorter retracements on the upside. Be prepared for anything. That's why we put all these scenarios out, especially to our monthly subscribers, on virtually a daily basis, and sometimes more than once a day. We don't want our subscribers to get whipsawed. I mean, imagine if they took it up to 786 and you were short. Okay, so yeah, here's our targets here. Here's our 5th wave targets, which fell short. We'll see how that plays out right here. Watch this from the 39.14. It sure looks like it's an A up, a B down, and then a C. C equals A there, and there are the larger wave 2 with a circle around it targets. I think that's it. Let me see. I got a pick for you guys to end with. Or do I? Let's see. That is that pick there. Okay, that's the same thing we just showed you. And to show the turn date there on 12/4 and the little red check marks, that's the Fibonacci time spiral from the November 22nd high. The NASDAQ has been in a bear market for over a year, and the Dow and the S&P are close to a year. They topped January 4th or 5th. Okay, so it's early on, long way to go. In C wave, we've got a 1 down, a 2 up, a 3, and a 4, and a 5, and that will complete C. It just began in August, and wave 1 ended in October, and wave 2 up ended on December 1st. So we'll see how this near term plays out, and let's put that down and leave you guys with that. Okay, until next time, take care, everyone.